Hey everybody, it's Jack. Today is Tuesday. We're in a crazy market. I'm going to show you. But before we get to that, I want to give you one of the best lessons I could ever give you. And that is how to tell the easiest market to trade from the hardest market to trade. And why that is. And how to always know what the market condition is. So you can just really know if you even should be trying to trade in some of these markets. Directionally, that is. Now, when I say directionally, I mean buying a stock and having it trend higher in the same direction from the moment you buy it, right? Or short a stock and it trends down from the moment you short it, right? That's the easiest market. So in the bull market, this is what this looks like. We've got a series of higher highs and higher lows as shown by the blue bars. The short-term trend point rising, intermediate-term trend point rising, and a long-term trend point also rising, and they're in perfect order. And that is a great trend. That's a beautiful trend. That's probably one of the best trends you could ever look at. Now, if I were to be able to program your brain and have you react to seeing a trend like this and just buying a stock at the market, this is the trend I would implant into your brain so that every time you saw a trend like this in a stock, you reacted by buying it at the market, putting a stop in 7% below, and looking for a double-digit profit. And when I say the easiest market, I mean that because if this was the S&P 500, that would mean that almost all 500 stocks in the index were also trending similar to this, and tech stocks even doing better. This is a real bull market trend here. And that's the easiest market to trade. On the other side is the exact same thing, but to the downside. Easiest market to trade. Shorting stocks works great here. Buying puts, stuff like that. Easy to trade because even though it's volatile, it's going in the same direction. It has a directional bias. Same thing with the bull market. Directional bias. So when I talk about options trading, a stock that has good options to trade, that stock has two things going for it. It has volatility, which is what you see here going up and down, the length of that daily bar. It has volatility and a directional bias. It has to have those two things. So if the broad market has those, in a bull market like this, you're going to find hundreds of stocks that have that. That's why it's the easiest market to trade. Same thing here. Directional bias and volatility. Great for options trading because that broad market is trending. It's probably going to go lower from here to this right-hand edge, right? That's why it's so easy. You can pick directional trades that are going to go with the trend. Right now, that's the easiest market on both sides. This is what we have. The hardest market. It's the hardest market because we have all three trend points above the stock here recently. And we have the S&P 500 is trapped in between trend points. So now this short-term trend point, it's going to act a little bit like a floor. And this long-term trend point is going to act a little bit like a ceiling. Think of it like that. So you got a bouncing ball in here. Not easy to trade. The hardest to trade. It is not trending. There's no directional bias. There's just volatility. Now this part back here, this probably shouldn't have happened. That was such an overreaction as I was talking about back then. But since then, it had to bust through this short-term trend point because that was serving as resistance. It did that, then it's finding resistance at the intermediate term and long term. So it's got to get up here closer to 570, closing consistently above that before we get bullish, before we get better. And then we're going to need to see a crossover of the trend points to the upside. Until that happens, we're in the hardest market to trade because it doesn't have a directional bias. It just has volatility. Now, the good news, just that volatility alone, that's always going to be there, and that's all you need to make money with options. Really, you want to keep your trades shorter? right? You don't want to do stuff months out because there's no directional bias. So you want to try to capture that volatility and do it the best way you could on a short-term basis or with covered calls, maybe a month out, stuff like that. But really, the volatility is keeping the options market high, really high price, because the market makers, they need to push that price of that option premium up to protect themselves in case they have to recover from shorting or going long one way or the other. That's why those options are so expensive. And that's why, even though we're in the hardest market to trade, use a strategy, because it's about strategy selection, not stock selection. So use a strategy, option strategy, if you want, that takes advantage of volatility. That's the best advice I can give you. So always look at that broad market so you'll know how hard the market is to trade and what you should do about it. All right, trade well. This is Jack. I'll talk to you soon.